And we're live. Good afternoon, everyone, from all over the world, wherever you're listening to me from rather. My name is Tony Thomas Allison, and I am the director at Halisi Consults. And Halisi Consults, as you know, is a business development consulting company. We help businesses, small businesses, medium-sized enterprises, startups launch, grow, and thrive with our business development services, our marketing services, and our investor readiness services. And we're currently doing this series called Investor Readiness. I'm sure you've seen the videos already or you've joined us live like you have now. And today I will be talking about transparency and due diligence when it comes to that part of getting your business investor ready. So I'm going to dive right in. We've covered a lot of topics, in this series, getting your documents ready, risk assessment, getting the right team for you to, portray to investors that you are ready for this level of investment. Now, today I'm going to talk about something that is very interesting because this is one part that a lot of people do not think about, especially Nigerians, when they are seeking funding from an investor or when they are seeking financing from a financial institution, but it's a very big part of the investor readiness process. So, transparency and due diligence, what is it? What does it really mean? What it means is this: any financial institution, any investor that wants to give you capital to, fund your business needs to carry out some form of background check on you. And this is what they term due diligence. Now, due diligence could mean a wide range of things. Like they could be checking for things as simple as a credit check. In the modern world and even in Nigeria as well, we have credit bureaus. Now, credit bureaus are organizations that monitor the credit behaviors, so to speak, of the people and the businesses in the business environment or in a country. So most of the time when you're seeking financing from a financial institution, the first thing they will do is check your details on a credit bureau. This is why we have BVN. This is why we have national insurance number. This is why we have social security number, etc. So BVN in Nigeria is how people check for your credit details to see how credit worthy you are. You being credit worthy means that in the US or in the UK or anywhere else in the world, if you were credit worthy, it would mean that you have good credit rating. You have excellent, very good, or good credit rating. But in Nigeria, for it to be credit worthy, it means that you have no outstanding loans, or if you do have loans, that you are servicing these loans well. So one of the first parts of due diligence that any company, any organization that wants to fund you, or any individual that wants to finance your company needs to do is do their due diligence by checking your credit worthiness. Now, it's a very big red flag if you have loans that are unpaid, if you have loans that are not being serviced regularly. It's a very big red flag for any organization that wants to give you money. They're probably going to stop the conversation there because it's going to, you know, it's a big red flag for them. Why would they give you more money into your business when you're defaulting on an old loan? So this is one part that people most of the time are not 100% transparent about, but thankfully there's a credit bureau that essentially would document all your credit activity in the Nigerian ecosystem or economy. And with your BVN, an organization can track your credit behavior. Essentially can see how many loans you've taken, how quickly you were paying back these loans, and if you've defaulted on any loan. The minute a financial institution is trying to fund you and they see that you defaulted on a loan once, that's enough. That's the end of that conversation right there. So that's one very simple way that financial institutions that are looking to fund businesses can do their due diligence on you. So how do you prepare for that? First of all, you have to make sure that you don't have any outstanding loans yourself. So obviously, the places that you've gone to, take loans. And as much as people say, oh, someone took loan in my name, it's impossible to do that in the current financial economic climate that we are in. Nigeria's system is actually way more advanced than people give us credit for. So it's impossible to take a loan in someone's name. So you yourself as an individual, as a business owner, you know the loans that you've taken already. So before you go and seek another loan, make sure that you've sorted out all the old outstanding loans that you have, or make sure you are servicing them on a regular basis. What that means is that you're paying back at the installment time that they've given you, and there are no issues with those loans. Sometimes even just having a loan is already sort of a red flag for some financial institutions that don't have that kind of risk appetite, that they don't want to take the risk of giving you additional loan again. And they would feel like, oh, they are overburdening you with this additional loan and my pullback. Essentially, when it comes to funding Nigerian businesses, when it comes to getting capital for your business, financiers, financial institutions, they're looking for any excuse they can give you to say no. So you have to do the work of being investor ready and prepare yourself and avoid getting to the point where they halt giving you a loan. Just you have to make sure that there is no reason in the world why an organization would refuse to give you financial assistance when you need it. You have to make sure all your documents are in place, etc. And the due diligence part of getting investor ready is one part that a lot of people miss out on. And usually, even as much as you have all your documents together, you have all your documents in place, if there's some form of red flag or some form of misstep in the due diligence part of being ready to be funded, that might be the end of the conversation. I have seen a lot of transactions where, a company had all the documents, they had even collateral, they had a good, healthy monthly balance. But then the financial institution takes their books, takes their account statement, looks through it, gets, a real accountant to look through their numbers and sees that, okay, there's a loan somewhere where they've been defaulting on. And that transaction halted immediately, because if someone is defaulting on some funding they've gotten in the past and we're supposed to repay, then that person is not, is unfortunately, sadly to say, is not trustworthy. So as a business owner, you have to make sure that you avoid these things. As much as people, in the Nigerian economy feel like anything goes, no, those kind of things follow you everywhere. And right now, with the BVN system and a lot of people leaving the country, etc., that BVN system can be plugged into the global credit system. And if you're defaulting on loans in Nigeria, I don't think that's not going to follow you anywhere else. I'm just saying that. So yeah, back to the topic: transparency and due diligence. Before you're giving money, these financial institutions literally have to take every step to make sure that you are trustworthy, you are credit worthy, and you will definitely give them a return on investment. So for small businesses, for medium-sized enterprises, it's very straightforward. You're seeking a loan. You have to be worthy of getting that amount in terms of your credit, in terms of the way you conduct your business, and in terms of the guarantee that the investors or the financiers will get a return on their investment. Now, when it comes to startups, it's a different conversation entirely. An investor financing your company is largely dependent on what you say and what they can see, etc. So it's a lot more about the relationship, building a relationship with an investor with the hopes that they'll, invest in your company. It's very tricky, but it's possible because a lot of people do it. But as much as a lot of people do it, where a lot of people, fall off is the due diligence part of the conversation. So if I'm sure you've seen the stories where a company has been funded, and the next thing you see, the owner of the business decides it's time to buy a Range Rover. That's one of the things that funders and investors are looking to avoid when they are funding a company. So they have to carry out very detailed due diligence with you. You find that when you get to this stage, they want to see your passport or the passports of all the directors in the company. They also want to, get your details like your BVN. Sometimes they might even ask for, some document from the police to show that, you're not, wanted for any crimes, things like that. It gets really thorough. And at this due diligence point where, if you've gotten to the due diligence part of the conversation, it means that they've more or less agree to fund your company. But then you have to scale through this fence, because it's not just about getting the documents in place. The documents are important because that's what gets you through the door. But getting through due diligence is one of the trickiest parts, because if you don't, work on this, if you don't make sure that, your business operations are transparent, the way you conduct your business is transparent, nothing shady, nothing dodgy is going on, it will be hard for you to get through the due diligence part of the investor readiness process. Now, due diligence could be as detailed as the financial institution will send someone without warning you to your business premises to inspect, to look at what you're doing, to ask questions about you from people around. They may hire, lawyers that do this as well, that do the research and vetting of, a company or an individual before they fund you. So there are very many ways that, a company can do their due diligence on you before they give you financing for your company. So that's something that you really need to consider as a business owner, as part of your investor readiness process, that when they're doing their due diligence on me, is there anything that can come to light that can prevent this organization from funding my company? Is something that you need to think about. It's something that you really need to make sure that all your I's are dotted and all your T's are crossed, and you satisfied all the requirements, and when you get to the due diligence part, it will just be smooth sailing onwards. So what are the things that you've done in business that you know that, okay, this might be questionable, or this might raise a red flag? How can I mitigate this before it becomes an issue? How can I resolve this snag before it becomes bigger than what it is? So you need to think about that, because there's nowhere in the world that a financial institution or an investor, an angel investor, a funder, etc., would release money to your company, will give you money without doing thorough due diligence. Several institutions have different processes of doing this, of getting this done. So you have to make sure that you are transparent in all your business dealings, that there is no court case somewhere where someone is accusing you of being fraudulent, or holding back their money, or of taking money from them unjustly. These are things that can come up in a due diligence process. Um Other things like your credit, checking your credit, making sure that you're not defaulting on any loans, or you don't have any loan that is on your record that might be holding you back from securing more investment. Make sure they're all resolved. Another part of due diligence is this: make sure you read all the contracts that are sent to you. So sometimes, if you're about to get into a financial arrangement with someone, make sure you have a lawyer, a qualified lawyer, that's actually reading all your contracts and giving you unbiased advice, telling you that, okay, this is the way to go about things and this is how you should do things. Because if you get a contract, you read through it, and you don't understand everything, and you still go ahead to sign this contract, and you breach one of the terms of this contract, it's going to be a big problem. Because if a funder says, okay, you need to conduct your business a certain way, and they put that in a contract, for example, they say, okay, you shouldn't seek funding from anywhere else but us, or if you seek funding from anywhere else, please notify us, because this money we're giving you, we want to make sure that you are able to pay it back and give us our return on investment before you go somewhere else to seek more funding. So these are small clauses that may come up, and part of you know doing your due diligence is that making sure that there is no issue that might arise, that might affect you being able to secure investment. So make sure that you are reading all the terms of the contracts, and make sure that you as well are transparent in all your business dealings, both with financiers and investors, and also with your customers as well. So these are the ways that you can circumvent, or work on your due diligence as a business owner before you get to that part of the investor readiness process. So yeah, if you're listening to me now on YouTube or IG, now is a great time to ask any questions about the due diligence process. I'm happy to answer any questions you may have about getting through the due diligence process of investor readiness. Mhm. Okay, docs. So talking about due diligence in getting investor ready, there are several ways that this due diligence can be done. Like I said, the most common one is doing a credit check, that and doing a site visit, coming to your location, asking questions from people that know you and all. So I want to mention this. So Nigeria being a very low trust environment, very low trust business environment, makes it harder for financiers to trust people, makes it harder for even business transactions to go through, because people don't trust people. And that's just the nature of doing business in Nigeria. So to prevent that from being an issue, You have to, make sure that there are people that can guarantee that you are trustworthy. There are people that can vouch for you, that can say, okay, this person is who they say they are, and they are doing what they say they do, and this business is legitimate, and you can go ahead with this transaction. That's why you find that, when it gets to some certain level of capital investment. For example, if you're looking for 1 million naira, 2 million naira, 5 million, 10 million, it's probably easier to get those amounts of money from financial institutions, microfinance banks, etc., or loan institutions as well. But if you're looking for something like 50 million naira, 100 million naira, when you start getting towards $1 million, now that is more in the Nigerian business ecosystem. That requires, you really building trust with the party that you are seeking money from. So part of their diligence, due diligence, quote unquote, is that they would do, a lot of background check among people that know you. And sometimes you would even find that some financial institutions only give out money to who they know in their social circles. And honestly, when I started earlier in business, I used to say, oh, it's unfair, you need to help people get a leg up. But the more I get into business, the more I do dealings with people, the more I start to understand why they do this, because it's easier to, chase someone that you know through your social circles for money than to chase a stranger that probably, takes money from you and disappears into thin air. Even though, they've gone through the due diligence process and they've been vetted, these things happen. So financial institutions literally have to arm themselves against these kind of things happening, from people defaulting on, the capital that that's been invested in their company, and these financial institutions are unable to get a return on their investment. So it's a big problem for these financial institutions, and it causes, the loan process for other people that are just coming in to be more difficult, because then there'll be more requirements, and these requirements can be in form of, okay, who knows you, what social clubs are you a member of. And that's why you see that in Nigeria, it's only these certain big men that are getting these big loans, because at the end of the day, it comes down to who you know, if you really want this really big amount of money for your company. Because it's easier to trust who you know than to trust, a total stranger that might or might not default. So the due diligence and transparency part of getting investor ready is incredibly tricky, and it's something that, you as a business owner probably have to have been preparing ahead for at least a year or so. If you're looking seeking a really high amount of money, you have to make sure that, all your books have been done way ahead, because due diligence, anything can be brought up and said, okay, this is the reason why we're not giving you funding. Funders can say anything. It might be one disgruntled employee somewhere that says something about you online, and they take it and say, okay, what is this, can you clarify what happened here? So anything can come out. They're going to dig as deep as they can, especially when you're talking nine figures in naira. If you're talking hundreds of millions of naira, in terms of funding, then, financiers might then, start to get really deep into doing their due diligence with you, to make sure that, everything is sorted and everything is done before they even, give you the funding. Obviously, they're going to do, normal due diligence on things like checking your income statement, going through your account statements. After asking for audited financials, most financiers will still ask for your bank statements. They want to see the way money is going and the way money is going up. What are you spending money on? If they notice a trend that, okay, you are spending money frivolously, you are using your bank account, you're using your business bank account as a personal bank account, it is the biggest of all red flags, because that just means that you have no financial ethics, and you just, spend money as you see it. And it's a big problem for them, because you have to be financially disciplined before anyone can invest in you. So they're going to do their due diligence with looking at your financials, looking at your books, looking at your actual bank accounts, reading it line by line, literally. And then, doing the due diligence of site visits, credit checks, asking about you, or doing research on you, doing background checks before they give you, a certain amount of money. The higher the sum, the more complicated the due diligence will be. Due diligence, would involve really, really high levels of checks, and you as a business owner needs to get ready for that. So yeah, that's the summary of how due diligence is done. Very short summary of how due diligence is done with financial institutions, and how you can get your business ready for this due diligence part of the investor readiness process. So make sure all your books are in order, make sure your financials are in order, make sure that you have well documented financials, like how you're spending money, your bookkeeping, your accounting is on point, because this is where they will check to see that everything that you said in your financials are true. And a lot of people, sometimes, or a lot of business owners sometimes, overlook getting their financial accounts audited. If you've had a business for over 5 years and you're seeking financing, or even over 2 years, you're seeking financing, you need to audit your financials. That's the honest truth. You can't escape it. It's expensive, but you have to do it, because an auditor's stamp on your financials just makes your life easier. So these are the kind of documents that you need to use to get investor ready in terms of the due diligence part. So your income statement, your cash flow statement, etc., all need to be done alongside your bank statement. And these financial institutions, they will compare and contrast and vet that you are saying the truth in terms of your numbers before they give you any type of funding, along with the credit checks, along with the police record check, along with you checking for any legal issues that might have come up in the past. They will be very thorough in checking on you before they decide to give you funding or financing for your company. So you as a business owner, you have to make sure that you are transparent to your business dealings, and you have done all the work. Your books are in order, your documents are in order, and you don't have any outstanding issue with anyone anyway that can be a red flag for a financier or for an investor not to invest in you. What you need to do is that you need to make your company, your business, you have to make it risk free for the investor. You have to make it risk free to the point that the investor looks at your company and says to themselves, "This is a no brainer. We should invest in these guys. Their business is solid. They have a solid financial model. They have a solid business model, and they know what they're doing. Definitely, therefore equals to we should give them the money that they asked for." So getting through the due diligence part is probably one of the most rigorous parts of getting ready for investment. So of being investor ready, the due diligence part is where investment deals go to die. That's the honest truth. So make sure that you are ready, make sure you've done all the work already before you even get to this part, and avoid any situation of a financier or investor saying no to you. So yeah, that's all I have to share today. Um, I look forward to speaking to you guys again next week about getting investor ready. Today I spoke about due diligence and transparency in your dealings, because Nigeria is a low trust environment, and I hope that you've picked one or two things from it. Till next time, my name is Shani Thomas Allison. I'm a director at Halisi Consults. Halisi Consults is a business development company. We help businesses, small businesses, growing businesses, startups, medium-sized enterprises launch, grow, and thrive through our business planning services, our marketing services, and our investor readiness services. If you'd like to talk to us about getting your business investor ready, please click the link in our bio to book an investor readiness consulting session. A few people have booked already. Thank you. And it was great to talk to them about, getting their business investor ready. Like I always say this, everybody's business is unique and everybody's funding experience is unique. But there's some rules that apply across board, and we are happy to, help with that. So yeah, reach out to us. We're happy to help, and we look forward to working with you. So yeah, that's the end of my live. Join us next week for another exciting, interesting episode. Do have a lovely weekend. Bye.